Hey guys, Ben here and welcome to Motivation to Invest. Where is the bottom for growth stocks? It is now time to buy, or is it still going to be like trying to catch a falling knife? In this video, we're going to dive into trying to answer that question. I'm going to dive into a few words which Cathie Wood of ARK Invest has just stated after her fund is underperforming in 2021. Then we're going to dive into a few words by the legendary investor Peter Lynch, who will teach us how to deal with stock market declines and how that affects us psychologically. And then finally, I'm going to dive into a few little surprises for you guys in this video. So be sure to stick around till the end, guys. If you are new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And remember guys, if you do find any value in this video, feel free to give it a big thumbs up. That helps out tremendously with the channel. With that being said, let's dive in. So to kick things off, let's start with a few words from Cathie Wood of ARK Invest, whose investment firm invests in disruptive and innovative technology. Basically, Cathie Wood is a pure play growth stock investor. I personally am more of a mix between a value investor and a growth investor. Ideally, I'd like what's called GARP, which is growth at a reasonable price. That's my ideal scenario. But let's hear what Cathie Wood has to say about the current state of the market.
I love this setup. The last time I was on, I think I said that this rotation was good news because it meant the bull market was broadening out. It was strengthening. Energy's up 40%, financials are up 27%. And from the peak in mid-February, our strategies are down. The ones that have been hit the hardest, not all of them, are down 30 to 35%. I love that setup. From our point of view, 5-year time horizon, nothing has changed except the price, and therefore the return, which at the peak of the market and of our strategy in mid-February, we expected a compound annual rate of return of 15%. On average per year from our strategies. Now that the prices are down, that number is somewhere in the 25 to 30% range.
Okay, so that's really interesting stuff. It seems Cathie Wood sees this as a potential opportunity still, and she knows each investing style comes in and out of popularity. For example, growth stocks performed tremendously in 2020, and now they're underperforming in 2021, as hedge funds and many large investment firms have started to transition out of growth stocks, take some profits, and actually transition into value stocks in cyclical plays. That's why we see financial sector up, we see oil stocks up, we see the S&P 500 at all-time high. For example, if I dive in right here, the S&P 500 is at over 4,000 points. So back in January 2020, it was around 3,000. So it's above and beyond where the market was before the pandemic. So it's up 27% from this same time last year. And from the bottom of the market, the S&P 500 is up a massive 83%. But personally, I think the general market is extremely high right now, and that potentially could be set for a correction. And when there's a correction, that money has to go somewhere. So we could be approaching the bottom for this growth stock decline. Of course, nobody truly knows exactly where the bottom is. So the best thing I like to do on this channel is to just identify great companies, value the company, and then buy the company below that fair value with a margin of safety. And that is honestly the best way to invest as part of a diversified portfolio of both growth stocks, value stocks, and even a few speculative plays in there. Personally, I found that to be the best long-term strategy in terms of getting the upside from the investing game, but also minimizing the downside risk. But the market does move in cycles, and for many of you guys, you will be feeling it in your portfolio, especially if you hold a lot of growth stocks or got in at them at the high points. Now, I did do a video back in February 2020 before this whole decline, and you guys can check that out. And basically, I stated the stock market could crash very soon. Of course, I'm not saying I predicted this whole growth stock transition because I personally would have actually trimmed more of my positions. However, I did notice some of the large hedge funds trimming their Tesla stock. And I stated this on a video. I actually got quite a lot of heat from that video because many Tesla bulls, and I'm actually a Tesla investor myself, did not like that video because I stated some of the original Tesla bulls, some of these hedge funds were trimming their Tesla stock. But the conclusion of that video was basically you need to trim your portfolio, you need to take profit, and you need to understand the difference between an investment and a trade. And we all struggle with this at times, even the professionals who are running the hedge funds, and I've actually spoke to many of them recently. We all struggle to actually identify exactly how we're playing the game. We can be overtaken by emotional and psychological biases. For example, if you're doing a trade of a speculative company, a speculative stock, you need to put a stop loss in. You need to take profit as soon as it reaches your target and be very disciplined and strict with your investment style. If you're more of a long-term investor in certain stocks, you're investing for the long term, you need to make sure you get in them way below that fair value so you're protected a little bit from the downside risk, and then of course diversify generally. But let's hear what Peter Lynch has to say about stocks falling and how you guys can handle it in the market.
There's always something to worry about, and the key organ in your body in the stock market is your stomach. It's not the brain. If you can add 8 and 8 and get reasonably close to 16, that's the only level of math you need to know. Curve, I mean, whoever kid was under the damn curve. I mean, you know, but you had to study this. You don't need this in the stock market. So all you have to know is you're going to see, it's always going to be scary. There's going to be always something to worry about. And you just have to forget all about it. Cut it all out and own good companies or own turnarounds. Study them and you'll do well. And that's all.
So the first clip is on the Motivation to Invest Instagram. So if you guys haven't checked this Instagram out, it's basically at motivation to invest _. We're on 57,000 followers now. Let's get that to over 60,000 easily from this video, guys. You get some great information in here, just real short snippets of investing wisdom. So this is the Peter Lynch video I'm going to show you right now. So this one's got over 1,000 views already, and it's really going viral on the internet.
What you learn from history is the market goes down. The math is simple. There's been 93 years a century. The market's had 50 declines of 10% or more. About once every 2 years, the market falls 10%. We call that a correction. That means, that's a euphemism for losing a lot of money rapidly, but we call it a correction. And 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. So every 6 years, the market's going to have a 25% decline. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet, and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. So you can take advantage of the volatility in the market if you understand what you own.
So there you go, guys. Volatility can equal opportunity, but only if you understand the true value of a company. Now I'm going to dive into a couple of stocks which are actually flying right now. So this is a brief overview of a small portion of my portfolio. For full access to my portfolio, you guys know you can check out the VIP membership group where you can get access to my buy and sell signals, exactly which stocks I'm buying, selling, and my entire 6-figure investment portfolio. The stocks and the story of how I grew $20,000 into over $250,000, and it's still counting. We're still trying to get to $1 million. I'm on the road to $1 million. That's my investing journey, and everyone's on their own investing journey, and we're all on this together, guys. I just wanted to point out to you guys some cyclical stocks. So the first is Corning here. The stock on my portfolio here is up 100%. We've got Facebook here, well, that's really like a large cap growth stock, but that's up 41%. Very Expo, so this is a cyclical company. Again, I believe it's iron ore mining potentially, or iron ore manufacturing. 247%. So that position is up the same amount as Tesla in my portfolio. So it's clear cyclical stocks are flying at the moment. But then if we take a look at SPACs, for example, Hims & Her Health here, that's down 33%. But I do admit I was overcome by psychological biases, and I saw the stock running up. I tried to get in. I set a buy order, and it actually bought the stock a little bit higher than I'd like to have actually purchased that stock. So that's my own fault, my own decision, and I'm still going to hold the stock for the long term and see what happens with that company. But that's what happened there with that company. I'd gotten a little bit too high, and I do admit that, but I'm still going to hold the stock, and that's part of the game. But then on the other end of the scale, because I've diversified, we've got Ferry Expo here, 247%, Facebook 41%, Corning 107%, and many, many more. Legal & General 40%. So it's all about balance, guys, in your portfolio. So really the most important thing you should do is know what you own in your portfolio, because if you know which stocks you own, you know what's good, you know what's bad. And remember, guys, on this channel we focus on deep dive analysis, and we're investing into businesses, not just stocks and not just ticker symbols, not just swiggly lines moving up and down. If you guys actually want to find out exactly how to value companies and access all my valuation models for various different companies as part of my stock research platform, then you can check out the link in the description below for our stock research platform course or the VIP membership groups. If you dive into motivationtoinvest.com, I'll just show you guys this briefly. So you get access to the private Discord group. I'm sure many of you guys are already in this as part of the VIP group. You get access to this advanced valuation model. So this will help you to value a company, so you know the company's fair value. For example, if I have a fair value for a company and the stock price has declined recently, which a few companies have, and the fundamentals of the company haven't changed, then that's a great opportunity to load up the truck on that company. But you need to know the value of the company. Most people invest into companies, they don't know how much it's worth, they don't know why it's going up, they don't know anything about the business, and then they're worried, of course, when it goes down. Now, many people do this, but to be a long-term investor, you need to understand the value of a company. Now, of course, I know people don't have time, and valuing a company can be a lot of effort. So that's when you can dive into my stock research platform. I've valued over 46 stocks now with their valuation and buy point. So you know when that stock is a good buy, when's a good time to sell. And these are all the different stocks in there at the moment, and many, many more. You also get access to my 6-figure portfolio updates and a bonus stock portfolio tracker. So there's obviously lots of testimonials from people that are enjoying the course so far. And yeah, that's just something for you guys to check out. There's 15 units in there inside the course, 15 different investing units, which are great for you guys to potentially access. But I hope you guys did find some value in this video. If you did, feel free to give it a big thumbs up. That helps out tremendously with the channel. And with that being said, I hope you guys have a tremendous day, and I'll see you in my next video. Invest safe.